Good evening. Welcome to my YouTube channel, The Unfolding Stock Market Crash. Okay, I want to go back to when I showed you this chart. It was about 2 months ago. And my point was, I was pointing out where this crash was from February 2020 to March. Since then, the market's going up 113%, all on inflation, all printing of money, $6.5 billion a day. That doesn't count all the different support, the $125 billion, another $180 billion for stock buybacks, another $100 million a day to help the banks out. They're printing $125 million almost every month to go in and to the banks and buy their mortgages, so the banks have more cash to keep operating because they don't have enough cash. So what's happening is this inflation is taking a toll not only on the consumer, but it's taking a toll on the banks, taking a toll on everybody except for the wealthy. And that's why all the wealth is going to the top 1% and the top 10%, which is destroying the economy from within. That's what this pattern right here proves. Now, the big thing that we have going right now that is a real concern is this. This identifies the confidence of consumers. Our home prices are starting to finally drop off. And you remember what started the crash back in 2006 to 2009, 2008 was the housing crash, right? Look at this. So the confidence of the consumer is dropping, and so therefore the prices, the home sales are dropping. That is very serious. When confidence drops, because remember what the job of the fake business news network is, to keep your confidence up, to get you excited, make you feel like the world is just perfect, everything's great. But what we're seeing is, and you look first at homes, once home prices start dropping, you go check and see, was it consumer confidence or is it mortgage rates? Well, mortgage rates are still low. So you check it out, it's consumer confidence they're dropping. So that's starting to drive prices of homes down. Very bad deal. Also, remember, wages aren't increasing. Okay, we haven't had big wage increases. Our inflation is drowning wage increases. So this really is disturbing right here, the confidence. But also remember, the confidence of home builders is also dropping. New home builder confidence is going down. So you got consumer confidence contracting, home builder confidence contracting. And it's not interest rates. Not interest rates. They're still cheap. So here's what I want to show you. I told my members today, I think for the next week or two, we're in a position right now where everything's kind of stalled. What does that mean? If you go and take a look at the bank stocks, remember, bank stocks and our tech stocks, the direction they go is based on what? What controls that? The treasury, right? The yields. So what we're seeing is, if you take our bank stocks, yields are getting high. They're up about 135 basis points this week. But look what's going on as they're starting to go up for the last few weeks. Yeah, sure, they're going up, but what's the trend? The trend is down. What does that mean? That's a dangerous divergence. When you have a trend going down and you have stock prices going up, that means you could wake up any one morning and you're sitting there, and let's say you bought a stock, and you wake up and your stock drops like this because of the divergence. That's very dangerous. And we're seeing that with almost all the banks. That, and even when the yields are very high, up to 135 basis points. Now we go back and we check with the tech, because remember, tech and banks, that's the market. All right, you go back with the tech, and what are we seeing? They're having problem. Even when yields are low, they can't break out and run. See Apple here? When yields are low, they're having a tough time breaking out. Now, Amazon, look at this. Look at that. Even when yields are low. So here's what I think is going on. I think we have hit that point of that pattern I showed you, that the big institutions are starting to pull back now. And I can see that in my color-coded chart. I told everybody, my members, look at the banks here. See how it's color-coded red? Okay? That's telling you something. That's very bad, okay? That means that there's not enough confidence to go buy bank stocks, and there's not enough confidence to go buy tech stocks, even when the yields are right. So I said to my members, why don't we just do this for the next week? Let's play it cautious. And we have not had a correction, a 5% correction, in about 207 days. That's insane, 5%. So for you who, if you're not in these stocks, okay, I would suggest look at the trend. All you got to do is put a 5% or 6% stop in, because we haven't had a correction of more than 5%, right? So why don't we just do this? Let's follow this channel. What I mean by channel, let me take the other side of this. Look at that. That's a perfect channel. And what else does it tell us? It tells us every time it pulls back, it doesn't pull back much. See, every time it pulls back, the trend stays intact. So let's continue to buy the spiders, and why don't you just put a stop in? So if it drops below 5-6%, you're out. That's what I think is the best thing to do right now. That's what we're doing here at Philstake, and we're playing it safe and let it keep going up. And that's it, and the more it goes up, fine. What do we care? But I am telling you, something is very wrong when you start seeing consumer confidence and confidence of builders with low rates as they are going down. That's not good. So look, what we know is this. Since 2009, the whole market went up about 285%, all based on fake, right? What's that mean? They print money, go in, and they buy their own stock. They drop their outstanding stock, so when their earnings come in, they're higher than the outstanding stock. So that pushes earnings up, which pushes stock price up. They've been doing that since 2009, okay? That's how fake this market is. So you only can get away with that so long. When the consumer confidence starts breaking, that tells me we're getting very, very close. Something is happening. So that's what I'm suggesting. Look at this again. That's what I'm suggesting. Just play it safe. Put your stop in. Just buy this, for the next couple of weeks, even for the next week. And we'll take a look at it again. That, to me, is the best idea. I'll see you on the charts. And please do me a favor. Subscribe, like, and please share this with folks. And by the way, listen to my radio show, okay, on a YouTube channel. And why don't you try this chart? The color-coded chart tells you when to buy, when to sell, when to add, when to run like hell. But let me tell you, even better, it tells you when to sell short, when this market is going to turn around and start collapsing. That's the beautiful thing. All right, see you on the charts.